Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello, and welcome to the Zach's Friday Finish Line. I'm Ryan McQueenie, a content writer here at Zach's, along with one of our editors, Maddie Johnson.
Hello, today is Friday, July 28th, and we're here to recap this week's biggest stories from the investment and financial world. We're officially on the other side of the mountain as far as Q2 earnings season goes, and we'll be going over all of the most important reports from this extremely busy week.
Yes, we're going to have kind of a rapid fire round, but before we get into that, I actually had a quick question for you, Maddie, who is my go-to resource for all things fashion. I need you to fill me in on a story that I saw this week. Michael Kors bought Jimmy Choo. Those are two names that I've heard in the fashion world, but as someone who's not in tune with the space, what does it mean and what do I personally need to know?
Yeah, so Michael Kors, the top U.S. handbag maker in the U.S., Jimmy Choo, high-end luxury shoe maker. They also make handbags as well. So Jimmy Choo, you would think, okay, if you can picture like my hand, it's like right here. Jimmy Choo is like right here price-wise. Okay. So way above price-wise.
This is bad radio because I can only see you, but her hand is significantly higher.
Significantly higher. Michael Kors does have a Michael Kors collection. So, but like their Michael Kors, the most popular division, it's quote unquote affordable luxury. So you can get a handbag from Michael Kors anywhere from $250 to $300.
Okay.
That's a lot of money. That's no joke. But I mean, a Jimmy Choo stiletto, anywhere from $1,000.
Okay. That's pricey.
That's a lot of money. That is a lot of money. So yes, Michael Kors bought Jimmy Choo. Huge news in the fashion world. They announced the deal on Tuesday for about $1.2 billion or around 896 million pounds. Jimmy Choo stock, CHOO is the ticker. They trade on the London Stock Exchange. They rallied right after the deal was announced on the London Stock Exchange. It was up like 17%. So Jimmy Choo initially put itself up for sale around in April this year. And its largest shareholder is actually Jab Holdings, which we're familiar with. And and it acquired Jimmy Choo back in 2011 and then took the company public in 2014. Jab, of course, owns coffee giants like Peet's and just bought Panera. So they're building this food portfolio and kind of wanted to get rid of their luxury goods
They own
segment.
They own Krispy Kreme.
Krispy Kreme, Keurig Green Mountain. So they're building this huge food empire. So they have this like luxury goods arm that kind of doesn't really fall in line.
Cut the odd man out there.
Yeah.
Okay.
And it also just comes just a few months after Coach bought. So Coach is one of Michael Kors' biggest rival. They bought Kate Spade. So there's a lot of consolidation happening in the luxury market. But the deal has also been rumored for a while. And so it's interesting to see what will happen. But they're also totally different customers. So like I said, affordable luxury. A lot more people can afford a Michael Kors handbag than people can afford a Jimmy Choo stiletto. A lot of celebrities wear Jimmy Choo shoes. So, but this is also similar to Coach's deal a few years ago when they bought Stuart Weitzman. It's another footwear maker. Not as expensive as Jimmy Choo, but their brand awareness is just as big. Because of the celebrity presence. Their nudist sandal, for example, I own them. One of my biggest purchases ever.
I have a quick question.
Yes.
How are these luxury brands doing in the like kind of weird, iffy retail space? Is there
not good?
Okay, it's struggle.
Not good. So that's why there's so much consolidation.
Okay, cool, that makes sense.
Yeah, but when Coach bought Stuart Weitzman, I'm not really sure what the feel of it was at the time, but today it's turned into this huge profit.
Yeah.
It's huge for them. So Stuart Weitzman, there's a ton of stores now. It's really helped Coach's bottom line. So if that is any indication for Michael Kors buying Jimmy Choo, it's a good sign. And then one more point, and I'll stop rambling about this deal, is that the thing with Michael Kors and what they've done and why they have been doing so poorly business-wise is because they've completely oversaturated the handbag market. I don't want to assume you haven't noticed, but walking down the street, there's a Michael Kors bag everywhere.
Yeah. Yeah, I know.
At
I
least they're used to
recognize
me.
them
Like the
for
hand,
sure.
like the MK logo
Yeah.
everywhere.
Yeah.
You know, and it's cheapened the brand.
Yeah.
So one of the biggest
Oh.
risks for Michael Kors, and one of the biggest concerns that I have is that they're going to do the same thing to the Jimmy Choo brand, and you can't do that to such a legacy luxury brand.
Snaps.
And the thing is, Jimmy Choo is not as popular as it once was. I mean, at the height of like Devil Wears Prada popularity, Sex and the City popularity, that's
When we like are over the fashion bubble already.
that's when like it's kind of like peaked from that.
Yeah.
So it's kind of like fell from that peak. So
Yeah.
it needs Michael Kors' global infrastructure to kind of get back to that height of popularity.
Well, that's very interesting. I knew basically none of that, so thank you for filling me in.
Yeah, so if you're interested in, there's a ton of write-ups about this, especially in other business fashion blogs. But it's really interesting.
Well, I'll point them to your write-up of the story from earlier this week.
Definitely.
Okay, awesome. So that was the latest in the fashion business. The getting a little bit more info about a corner of the weird, transitioning, struggling, but changing retail landscape. We're going to move on to earnings reports. Like I mentioned earlier, this is a tidal wave of reports this week. Almost
and
overwhelming.
Apple still hasn't even reported. So
Yeah, we have Apple coming up next week. We're going to be kind of doing this rapid fire style, looking at earnings, revenues, and key stats to note of the most important reports this week. Most likely we're going to miss one you're interested in, and most likely we are going to miss some of the story in each individual report, but trying to cover as many bases as we can, just kind of rapid fire going at it. Maddie, I'm going to ask you to start with a report from earlier this week, which was Alphabet, aka Google.
yeah, right and early on Monday. So the company posted earnings of $5.01 per share, and that beat street estimates of $4.39 per share. The company reported diluted non-GAAP earnings of $8.90 per share, which beat the Zacks consensus estimate of $8.17 per share. It's a lot of earnings. Alphabet reported total revenues of $26.01 billion, and taking out so this is where Alphabet's earnings get really tricky.
Yeah.
So taking out revenues of Google network members, the company saw revenue figures of $21.76 billion, and this number beat our consensus estimate of $20.83 billion. All right. So aggregate paid clicks, so this is where Google makes up most of their revenue. Aggregate paid clicks were up 52% year over year and 12% quarter over quarter, while cost per click was down 23% year over year and 6% quarter over quarter. Alphabet also noted that the result of a recent EU regulatory filing, just that little thing, which slapped the company with a $2.74 billion fine.
Just a little guy.
Just a little fine.
Yeah, so for those that don't know, basically it was kind of like an antitrust case.
Yes.
Basically accusing Google of manipulating search results to point people towards their own properties first, which was they found to be in violation of EU antitrust regulations.
Yeah, the European Commission does not mess around with
does not
stuff
play
like
around
that.
with that.
No.
So yeah, that is certainly a big enough fine to make a dent. I'm gonna move on here. I will say, interesting with Alphabet and these Google revenues, you really want to pay attention to whether paid clicks growth is then outpacing the slump in cost per click. Obviously, cost per click, as we shift more and more towards mobile every day, and that's been going on for years now, but it's continuing. In mobile advertising revenue, you're getting less cost per click, deemed by advertisers to be less beneficial or a less of a quality of a click, so you pay less for them, which is something interesting to know. I'm going to move on to AMD, which is a company that has been just hogging the headlines this year. On a GAAP basis, AMD reported a loss of 2 cents per share, and on a non-GAAP basis, the chipmaker posted a profit of 2 cents per share. Adjusting for stock option expenses, the company posted a loss of 1 cent per share, which beat the Zacks consensus estimate, calling for a loss of 2 cents per share. Revenue figures came in at $1.22 billion, topping our consensus estimate. of $1.15 billion. The chipmaker's quarterly revenue jumped 19% year over year and 24% sequentially. AMD's computing and graphics segment revenue jumped 51% year over year, coming in at $659 million, and management cited strong demand for its new Ryzen desktop processors as a reason for that. It was a very key product for AMD as it tries to snag a little bit of market share from the likes of Intel, which we'll get to later. Maddie, I'm going to keep us moving here onto our favorite fast casual chain. Kind of, I guess, depends on who you ask these days, but one in the news all the time regardless, and that's Chipotle.
Yes, so Chipotle posted earnings of $2.32 per share, beating the Zacks consensus estimate of $2.16 per share. The company saw revenue figures of $1.169 billion, missing our consensus estimate of $1.184 billion. So total revenues were up 17.1% from the prior year quarter, and comparable restaurant sales, which is one of the more important factors for restaurant and retail companies, climbed 8.1% from the prior year period. Restaurant level operating margin increased to 18.8% from 15.5%. And investors should note, however, that earnings were still significantly lower than 2 years ago, prior to the food safety scandals.
Yeah, so those year-over-year comparisons are going to be boosted, obviously, by the fact that 2016 was a particularly rough year for the company. So interesting to note, still the recovery ongoing. Looking at Facebook, a company that has never needed a recovery from really anything, a consistent growth driver over the years. Facebook posted diluted earnings of $1.32 per share, surpassing the Zacks consensus estimate of $1.13 per share and increasing 69% year over year. So much for the tougher year-over-year growth comparisons that the company warned us about earlier this year. The company saw total revenue figures of $9.32 billion, topping our consensus estimate of $9.17 billion. Revenues were up 45% year-over-year. Daily active users, DAUs, came in at 1.32 billion for June 2017. That blows my mind. In the month of June, 1.32 billion people using Facebook every day.
I mean, I will say Facebook is where I get the majority of my news throughout the day, just because of the type of platforms that I follow on Facebook. And I was checking that thing like crazy. Just because of
recent events.
Just recent events.
Sure. Yeah, no, that makes sense. I'm the same way with Twitter. So yeah, that's interesting.
Literally every day, breaking news, breaking news every hour, breaking news.
Yeah, something that's very interesting. It's interesting, I think, to look at the daily totals because MAUs, this is monthly active users, was 2.01 billion. So obviously, you're going to see a slight difference there with people who don't check it literally every day. To me, it's kind of a foreign thought to not check my Facebook like every 2 to 3 hours at the most, if not more frequently. I have desktop notifications. I have mobile notifications. Like I know when something goes down, and then that's also one of 3 to 5 places I go immediately if I know something's happening in the world.
And now I will say, I wonder if the implementation of the paywall on instant articles will have any effect on these numbers in the future.
Yeah, well, that's a good question. And
just because how it'll change how people get news, and I guess it'll change which publishers get the most followers, and stuff like that.
That's certainly true. Another thing to look forward to is the fact that now Facebook has definitely said second half of the year is going to be one of investment and spending. So this kind of these tougher year-over-year growth comparisons that we were warned about earlier in the year may start to see in Q3 and Q4 finally, because 69% growth in earnings, 45% growth in revenue. I'm not seeing the tough year-over-year comparisons myself. But so DAUs were up 17%, MAUs were up 17% year over year. Yeah, and just another rock solid report from Facebook, who is, I know, less of a fun, interesting tech stock and more of just a blue chip giant that's consistently growing and dominating and leading the tech world. So another report to confirm that for us. Shifting now to another tech giant, Intel.
Yes, the chip maker reported non-GAAP earnings of 72 cents per share, topping the Zacks consensus estimate of 68 cents per share. And the company saw record revenue figures of $14.8 billion, surpassing our consensus estimate of $14.41 billion and growing 9% year over year. So breaking down Intel's key business units a little bit, its client computing and data center groups grew 12% and 9% year over year, respectively. And these two groups were key growth drivers for its record revenue figures this quarter.
Sure.
And Internet of Things group grew 26% from the year ago period, while non-volatile memory solutions group, it's a mouthful, surged 58%. So Intel keeps growing.
Yeah. At a good pace
at
for
a good
company
pace.
its size and in key divisions, especially.
Especially, yeah. I'm pleasantly surprised quarter over quarter with the growth of its IoT segment.
Well,
so.
that's definitely something interesting to look at with the semiconductor companies is, we touched on AMD earlier, who's, offering new lines of products to directly compete with the likes of Intel, NVIDIA. In a sense, when you're AMD, you're looking to snag market share, but that doesn't necessarily mean, you're drowning out the competition when overall demand across all segments is growing industry-wide. So plenty of room for people to share the growth in the Internet of Things, data centers, cloud, and things of that nature, AI, as we keep going. So yeah, I thought that was another interesting report from Intel, another interesting chip maker to look at. Looking at always a good report to look at, Starbucks, another company we interact with daily basis. Are you a daily Starbuckser, would you say? How many times a week?
No, I don't. I'm trying to save money, so I don't go to Starbucks as much as I used to.
No, are you a Starbucks rewards membership person?
I haven't.
I haven't committed, but
I haven't committed yet either. Just because it's using my phone to pay for things that I haven't transitioned to yet.
Okay, you still have that mental block, if you will. I have kind of a weird mental wall with mobile payments as well, but apparently we're in the minority here because they're getting to it. Let's get to some figures here. Starbucks reported earnings of 55 cents per share, matching the Zacks consensus estimate of 55 cents per share. Revenue figures came in at $5.7 billion, coming in line with our consensus estimate. Revenue figures up 8% year over year. So decent results, matching expectations. Getting into kind of some key units here. Global comparable store sales were up 4%. U.S. comps were up 5%, and that's thanks to 5% growth in average tickets. So people spending more money, presumably on those just monstrosities that were those unicorn drinks.
The unicorn frappuccino.
That was like $8.
And I believe that the buy one, get one free frappuccino promotion was probably included in this past quarter. So a ton of frappuccinos. Frappuccinos aren't cheap. And I think it was the rollout. I don't know if it was this quarter or like 2 quarters ago, but their Mercadito lunch thing.
Yeah.
Those are like slightly.
Yeah, you're spending more.
Spending a little bit more. They look very tasty.
Yeah. China comps were up 7%, and that was a 5% increase in transactions in that unit, so getting more people in the door. And then, I mentioned the rewards program because membership grew 8% year over year. They now have about 13.3 million active members. That's going to make it one of the more popular food, drink rewards programs in the world.
Yeah.
So, something ridiculous like attributable to 36% of U.S. sales was the rewards program. So, I think clearly, like, we're going to be in the minority soon of people who we don't like using the phone, but that's the rewards program's like very based on the mobile transaction and
I know.
presenting the
And
phone at
whenever
the
I use
counter.
cash at Starbucks, I'm like, I probably should really get it together.
Yeah.
And I want to point out that they're going to start shuttering all of their Tiavana stores. They're closing that down.
Yeah, also known as that tea place you walk by in the mall. Like every mall has one, but nobody goes to malls anymore. So
I know. And they really can't compete with Argo Tea.
yeah.
Not that I like tea, but I feel like I would go to an Argo Tea more than I would go to a Tivana.
Argo, Tiavana, and David's Tea also a
David's
player
Tea is
that.
bomb. Are they public?
David's Tea? David's Tea is, yes.
DT?
Mm-hmm.
Okay. What else was I going to say?
I will remember the David's Tea IPO very well because it was my first day here at Saks.
I wonder what tea Starbucks is going to be using in their store locations.
Well, yeah, so shuttering the stores, I don't think necessarily means getting rid of the brand. So they might be keeping that around.
Interesting.
I wish I had the answer to that in front of me. Unfortunately, I don't. But yeah, they're selling it in their own stores.
Right.
So you would think they could, depending on what the supply chain is like, keep it around.
Right.
Yeah, another interesting report from Starbucks. Moving on to this week's hottest report, and not necessarily for a good reason, Amazon.
Yeah, well, Jeff Bezos is not the world's richest man.
He was the world's richest man for about 7 hours.
Yeah, maybe it's like the bald factor that like.
I think he'll get back.
He'll definitely get back. Okay, Amazon. The company posted earnings of 40 cents per share, missing the Zacks consensus estimate of $1.40 per share. Just massive miss. Just a massive miss.
Yeah, no typo.
Yeah, no typo. Yeah, when I first saw that, I was like, oh, did we get that wrong? No. It was just a miss. The company saw revenue figures of $37.955 billion, beating our consensus estimate of $37.214 billion. So just kind of edged past that. So total revenues were up about 25% year over year, while profits were down a whopping 77% from the prior year quarter. AWS, so the Amazon Web Services, their cloud-based division, revenues totaled $4.100 billion in the second quarter. And this marks growth of about 42% year over year and 12% sequentially. Interestingly, segment operating income increased just 27.6% to $916 million, and segment operating margin was down about 10% to 22.3%.
Yes. Yeah, so just to clarify there, not down 10 points from 32%, but down 10% from like a 24.9% operating margin in the previous year quarter, which is interesting because you're looking at an earnings beat or an earnings miss of like $1 per share. That's a pretty significant miss. And profits down 77% year over year. How did this happen? Where do we blame?
Is it just like all the investments?
Well, I would imagine that spending has increased to an extent.
Because the Whole Foods deal isn't included in this
that's
quarter.
all excluded. They even excluded it from their outlook that they provided as well. So,
interesting.
We heard this week they're working on top secret medical records and machine learning projects. AI 1492, weirdly named project, but
a horribly named project. If I can be blunt.
One thing we do know for sure, operating margin in one of their most profitable divisions down significantly year over year. So could be part of an explanation for that earnings miss. Obviously, not the whole story. But yeah, it was a shocking one, especially considering the fact that revenues beat, rather comfortably. So I guess the next few days of trading will reveal whether the.
But I also feel like this
more.
isn't that uncommon with Amazon. So last quarter,
they don't care. just crushed.
But they crushed it. But then I feel like 2 quarters ago,
They're very inconsistent. Yeah.
I don't know if they missed, but
it's kind of a audacious, just
like, oh, okay.
we'll do whatever we want, and you're gonna like it. Nope, you're gonna like it. So yeah, Amazon dropped in after hours trading, but not what you would expect for a $1 miss.
I mean, it was at what, only 3%?
Yeah, 3 or 4% in after hours trading, and then you're looking at people rationalizing that with, well, revenues are strong, which they are. So
revenues are strong, and I kind of like my free 2-day shipping. Let's be honest.
So another interesting quarter for Amazon, and the story will only get more interesting as that Whole Foods deal looks to close in the second half of the year. I was talking to a friend yesterday. We're both very excited for the just kind of out of place Echo sales counter that is going to be in the Whole Foods stores. I'm just assuming at some point.
An Alexa holograph.
Yeah. That's going to be crazy. But yeah, that'll close in the second half of the year, hopefully. And then we'll start to see an impact.
You'll see Alexa dots all over a Whole Foods store.
Mm-hmm.
Connecting you, guiding you. Where's this random, weird, organic product that you cannot
Toothpaste.
find?
Yeah. So as a reminder, everyone, if you felt we missed something, or if you want us to cover a specific story in the future, feel free to shoot us an email at podcast@zax.com. You can also check out all of our other exclusive audio content at zax.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. Thanks again for joining us. We will see you next time on the Zax Friday Finish Line.